Good morning, ladies and gentlemen. Welcome to the Atlantic Lithium investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand side of your screen. Just simply type in your questions at any time and press send. The company may not be in a position to answer every question it receives during today's meeting. However, the company will review all questions submitted today and will publish responses where it's appropriate to do so. Before we begin, we'd like to submit the following poll, and if you give that your kind attention, I'm sure the company would be most grateful. And I'd like to hand over to Chairman Neil Herbert. Good morning, sir.
Thank you very much, Mark. So many thanks to everybody for attending today. Really welcome that you're joining us. So I'm going to let Len take us through the presentation, but before I'm going to give you some opening thoughts, things for you to think about as you listen to the presentation. So the first is this, and I think it's very important, the space in which we are operating is obviously lithium. If you look at the outlook for lithium, it is very good indeed. Obviously, the movement to electric vehicles has fundamentally changed the demand pattern for it, and we just really can't produce enough of it quickly enough. So I always give a couple of estimates out there, one of which is, some of you may have read a book called Volt Rush by Henry Sanderson, who's an ex-FT correspondent. He's estimating you need 72 new lithium mines in the next 10 years. And the other one I give is Benchmark Minerals, who are estimating that you need, and Benchmark Minerals are obviously a significant commodity analyst, and they're forecasting you need 59 new mines. And for all of you that know the industry, you'll realize it's very difficult and time consuming to bring new mines to production. So those of us who are already advanced in that process obviously are in a very strong position. So the second thing, and I'm sure this will come out as Len talks about it, we have a superb project in Ewoyaa. And of course I would say that, but if you look at the comparables out there for African projects, you'll quickly realize that in terms of the nature of the deposit, in terms of what we have, in terms of the geology, is just better than anything else that you can see out there at the moment. In terms of the situation, the country that we operate in, Ghana, obviously has a long mining tradition. We have fantastic infrastructure, roads, power, etc. And indeed a workforce. We're overwhelmingly a Ghanaian company who have, our workforce has a great deal of experience working in the mining industry. So that in itself, I think, is very important. And the last thing I'm going to leave you with before I hand over to Len is and some of you will have seen the announcement this morning regarding appointing a new COO. So we're in the process now of moving away from the exploration stage, which Len has led marvelously. It's his discovery, it's his project, he brought it forward. But it's now such a good project that we're taking it forward to production. You'll see that we put out the pre-feasibility study with eye-watering numbers, frankly, in terms of economics for the project. And indeed, it's a project which is not very difficult to take forward, and I think that will come out in the presentation as well. So we already have a mining license application in. So we hope by the end of next year we'll be breaking ground on the project, and indeed our plan is to be producing in 2024. And so with those opening comments, I'm going to hand over to Len, and he'll take you through.
Great, thanks very much, Neil, and welcome everyone. Good morning, or wherever you are in the world. I'd also just like to introduce Amanda, who you can see she's joined us as well. Amanda Haasas is Finance Director, and we'll now go through our slides. So just a cautionary statement. I won't dwell on that. So before I get into all of the detail, this is just a snapshot of everything about Atlantic Lithium. So we're all here and we're focusing and developing the Ewoyaa lithium discovery. It's currently a 30.1 million ton resource at 1.26% lithium oxide. It's a spodumene dominant pegmatite, and it's very coarse grained and high grade with low contaminants. So very easy to process at the mine site. So as a result of that and our proximity to operational infrastructure, we've got exceptional pre-feasibility study economic metrics, which you can see there. We'll get into more detail on that. And obviously we've got our partner Piedmont, who's helping us fund this project. There's significant exploration upside. We've only really drilled within a 13 square kilometer of a total 560 square kilometer portfolio in Ghana, and an additional 700 plus square kilometer applications in Ivory Coast. Strong cash position, and yeah, we'll get into the details of the project. And obviously, very important ESG. So the most critical aspect is our team is 100% Ghanaian bar one expat active in Ghana currently. Obviously we pride ourselves on our Ghanaian team that's helped this project right through from discovery through to scoping, and now the PFS that we've just put out, and as we move into the DFS in the next stage. So just a quick corporate snapshot. You can see a healthy cash balance there, and our top 20 shareholders here. So importantly, Azure International Holdings, they're a South African or private South African iron ore ferrochrome and manganese miner. They've backed the company since it IPO'd, since the former MD and CEO Vincent Mascolo IPO'd the company in 2014. And they've continued to maintain their shareholding throughout the history of the company when it reinvented itself from an iron ore explorer to a multi-commodity gold and lithium explorer in West Africa, to then making the Ewoyaa discovery and now a developer of the Ewoyaa project. DGR have been there also since IPO, and they're now a smaller shareholder. Piedmont Lithium Inc. Recently joined on the board and have just under 10%. And we're now seeing some additional funds coming on board, most recently the Electrification and Decarbonisation Fund with now just over 3%. So board and management, well, myself, I'm a geologist. I've been with the company since 2015, made the discovery in Ghana with my team, and continue to de-risk the project. I've only really worked in Africa, and in particular West Africa, since I started my career with Rio Tinto in '96. I spent 4 years at North Parkes copper gold mine here in Australia, and I now live in Brisbane. We've also got Amanda. Amanda joined us as our company secretary and CFO, and most recently stepped up onto the board as finance director. We've also got Stu Crow as our non-exec director. He's also been with the company since it IPO'd, and our two nominees from Azure Mining in South Africa. So that's Kieran and Christelle. The key guys, key team in Ghana is headed by Ewan. He's our exploration manager, and Abdul Razak, who's our principal geologist there. So just touching on the Piedmont investment. So that's a $103 million US investment. Stage one is complete, where they've invested into the holding company. So that's Atlantic Lithium Limited. And that's got them there just under 10% shareholding. And we're currently in stage two, where they're funding us through studies. Once they've completed that, they then have a right to 22.5% at the asset level, and the right to continue to stage three. At stage three, once they've funded $70 million of the capex to build the project, they then would have earned up to 50% at the asset level, and have a right to 50% of the offtake at market rates. Atlantic maintains control throughout that process, so through studies and operating mine. I'll just let Amanda talk on this slide.
Thanks, everyone. So what I want to do is just take quickly through what's happened since we've listed on the ASX. So at the time that we listed, we envisaged about 30% of our company register will be held in Australia. At the moment, we're sitting at 24% of our total shares are sitting on the Australian register. Since the listing went through, we've had 35 million shares come across, and that represents about 6% of the DI register that's come across to Australia. And we know that there's a number of significant holders that are still in the process of moving probably around 34 million shares across. You'll all understand the current nominee system and the brokers in the UK. Some brokers are kind of harder, and the nominees are harder to move the shares back, but we're working with those people and the brokers involved to kind of get their shares into Australia. Most of these are Australian holders that have held for a long time. So if I just take you quickly through the top holders list that I've put in for the first time. So what we have here is kind of mostly nominees. So they're the shares that are sitting on the DI register in the UK. Piedmont Lithium is in Australia now, and there's a number of other holders on there that are actually Australian holders. What I wanted to kind of explain to everyone, I know there's a lot of questions around DGR and where their shares are and if they're selling or not selling. So it's very difficult to determine that, and I can't really give definitive answers because their shares are held across 3 different nominee accounts, including Pershing, Vidicus, and one that's lower down. But what I do is we get a register every month of beneficial ownership of the shares right across the company, and I load that information up into the website every month that I get it. So just to give everyone kind of a heads up that you can look at the website at any time and see what the current shareholdings are that I know about. Okay, Len, over to you.
Great, thanks, Amanda. Okay, so I mean, we all know why we're here. Lithium, the outlook and the macro thematic around lithium is exceptional, and that's really driven by primarily EV demand and decarbonisation generally in stored energy space. Most importantly, from my perspective, is around the SC6 pricing. So in our recent pre-feasibility study, we used a life of mine annualized average of just under $1,360 per ton. And most recently, you would have seen Pilbara's BMX cell in spot over $8,000 a ton. So exceptional pricing at the moment, and that's really driven by that supply-demand difference currently. I won't dwell on here, but yeah, this is important for us. So our vision is to deliver a sustainable lithium supply with a positive social impact in Ghana, in particular, to support the global transition to a carbon neutral future. So the Ewoyaa pegmatite discovery, so this was made in 2018, and since then we've drilled in excess of 140,000 meters, and that's delivered multiple resources, and the most current resource is at 30.1 million tons at 1.26. Now, importantly, over 20 million tons of that resource is indicated, and most recently in the PFS, we delivered our maiden reserve. So you can see an exceptional resource to reserve conversion there. So over 90% of our indicated resources have converted to a reserve, which is really very good, and that really indicates the strong continuity of mineralization and the fundamentals that deliver the project economics that is a Ewoyaa project. Now, I just have to correct myself, because that current resource of 30.1 million tons is based on roughly 90,000 meters of drilling. And in March this year, we commenced a 37,000 meter drilling program, which then grew to 47,000 meters. And we just completed that last week. And so that will all feed into a resource upgrade, which we're targeting for the end of this year. You would have seen some results that we released from there. So I'll move on to the next slide. So this is our portfolio. The map above here in gray, that's the coast of West Africa, and blue, the Atlantic Ocean, or the Gulf of Guinea. To the right is the Ghanaian portfolio with the capital Accra, and to the left is the Ivory Coast portfolio with the capital Abidjan. And then you can see that zooms out to the map below, which is a geological map background. The pink are granitoids, which are spatially associated with the pegmatites. And the light blue, again, that's the Gulf of Guinea. So you can see our 560 square kilometer portfolio in Ghana in the bottom map there, and where we've made the Ewoyaa discovery circled. Now that's 100 kilometers from the capital of Accra, along the N1 Takoradi Highway. And importantly, the deposit footprint is 110 kilometers to the operating deep sea port of Takoradi. Now, the photo on the left there, that's an aerial view of the Takoradi port. It's a dedicated minerals handling port with ship loading facilities in place and excess capacity. So they're currently exporting manganese and bauxite out of that port. This is what the mineralization looks like. So the photo on the left, that's our coarse-grained pegmatite in outcrop, our P1 type pegmatite, and on the right, what it looks like in drill core. And the two cross sections in the middle, they're typical cross sections through the Awuya main deposit. And you can see the mineralization, which is in pink, that's the pegmatite. It comes to surface. It's up to 100 meters wide at surface and then pinches down to roughly a 30 meter plus wide dike, a pegmatite dike, which is open at depth. The resource is currently modeled to a minus 190 meter RL, so that's roughly 210 meters below surface. And the mineralization is open at depth and along strike. So most of our mineralization is this coarse-grained P1, which you can see in the photos here. So that represents 80% of the resource, with the remaining 20% of the resource P2 type mineralization, which occurs on the hanging wall and footwall contacts as like a chilled margin or cooling rind to the pegmatite. Now that's important because we've completed a lot of metallurgical test work. We tested just on 0.5 ton of drill core for the scoping study. We then repeated that work for the pre-feasibility study. That's 1.7 tons of drill core. So large sample sets. And you can see here, each of these graphs represents one composite of that 1.7 tons of material. So 64 composites across the deposit footprint. So good variability sampling across the deposit, good representation of the style of mineralization we expect to feed into that plant. And we've consistently demonstrated that we can produce a saleable spodumene concentrate at 6% lithium oxide through a coarse 10 millimeter crush, through a gravity-only process flow sheet with recoveries up to 90%, but averaging 70% in the coarse P1 mineralization, which are those bar graphs in blue, and lower at around 50% in the P2, the finer grain mineralization, in the bar graphs in green. Now, importantly, that concentrate is very low in contaminants, so it's low in iron, low in combined sodium, potassium, and that makes it very favorable for off-takers. So the lower that is, the better. And in our case, we're consistently below that 1% Fe2O3. And this is achieved through just a gravity-only process flow sheet. We don't need to go to flotation. And what that means is low capital intensity and low operating costs. And that's really translates through the economic studies that we did in our pre-feasibility study and the very robust economic metrics that came out of that. We've also successfully converted our spodumene concentrate to lithium carbonate and lithium hydroxide battery grade through ANSTO here in Australia, in Sydney. And we've also demonstrated that we're able to produce byproducts or credits through DSO fines. So that's the fine material that comes out of the primary crush phase, which you would otherwise lose. And feldspar concentrate. So feldspar is used in the ceramics industries. So those byproducts were included in the financial model, which we'll come on to in the next few slides. So as with any mining project, logistics is key, and our deposit is within a kilometre of the Takoradi Highway. You can see on the top left there, and 110 kilometres to the operating deep sea port of Takoradi. And we've got grid power that runs over the deposit footprint, which is fed by the Akosombo hydro dam in Ghana. So low cost energy, green energy, and exceptionally close to operational infrastructure, so low carbon footprint overall. So a very well located project, and arguably one of the best located projects or hard rock lithium pegmatite projects out there. So in terms of exploration upside, our drilling to date has delivered a 30.1 million ton resource. That's all focused within roughly a 13 square kilometer area around the Awuya pegmatite, which is here circled in yellow. Now, through our exploration programs, which are very systematic, we've identified a lot of targets to the north of us, which we've drilled as part of this 47,000 meter program. And that has delivered some really good pegmatite hits at the grass cutter north target, which we've announced earlier this month, including hits over 20 meters of 1% plus material. So we will continue to add tons to the resource, and the drilling that we've just completed will certainly be able to deliver additional tons to our resource. So here you can see some of the hits, the drilling intersects that we've announced to date. So we've drilled an additional 47,000 meters over and above where the current resource sits. And we've announced approximately 15,000 meters of results to date, with assays results ongoing. In there, we've reported multiple hits outside of the current resource, such as 69 meters at 1.34%, 67 at 1.2, 59 at 1.07. And these all occur within the, or just below the Awuya main deposit in this area here. So these will all be pulled into the pit optimization, likely going into the next phase of studies. Plus, we've reported a lot of hits within the current resource. So the drilling program was designed basically to increase the confidence in a current resource. So roughly 2/3 of the meterage was targeting conversion of inferred to indicated material, as well as converting the first 2 years approximately of mine life from indicated to measured. And then 1/3 of that drilling was assigned to exploration or resource growth outside of the current resource footprint. So you can see here some of the hits within the resource. So this is the section on the right. This is over the Awuya main deposit, where it's roughly 100 meters wide at surface. And you can see there on that close space grid of 20 by 20 meters to deliver measured resources and ultimately proven reserves once we put it through the studies, that we've had some really strong hits, 84 meters at 1.63, 89 meters at 1.52, 90 meters at 1.48, 77 at 1.5. So very high grade, good continuity of mineralization. And this all proves our initial concepts of focusing on this area as the initial starter pit for the future mine. So all of this drilling will be reported throughout the remainder of this year, and ultimately that will feed into a resource upgrade, which we're targeting for the end of this year. Now, outside of that mine corridor or the Awuya target area, we've got our remaining 560 square kilometer portfolio. And you can see directly around the Awuya area on the left of that map there, and the Cape Coast license currently. We run a very systematic exploration approach, which has proven to be effective and delivered mineralization. And that consists of high resolution helimagnetics and primarily radiometrics, which is flown at 25 meter terrain clearance and 50 meter line spacing. And in addition to that, we do 100 by 100 meter grid soils. And that basically is used to define geophysical and geochemical anomalies. We generate heat maps, which is what we're looking at here. And we follow those up on the ground with mapping and then systematic auger drilling. Now, outside of the current Awuya deposit, there's also the historic Ejisamanku Hill prospect. This was actually drilled by the British Geological Survey in the early 60s, and they did a back of the envelope deposit of 1.5 million tons at 1.66%. It's non-JORC, but they're proven spodumene-bearing pegmatites there. You can walk over them and you see outcropping spodumene. That license area is currently pending grants. So at this stage, all of our work is focused primarily around the Awuya pegmatite field and exploration targets that will directly feed into the future mine operation. So ESG is critical to us. As I said earlier, our team in Ghana, we only employ one expat there, and all the rest of the team primarily come from the communities around the deposit footprint. They all go home at the end of their day's work, back to their families, and as a result, we're very well ingrained and part of the community where we operate. So we've got a very strong relationship with our community, and they're our voice, which is exceptionally important in Ghana and in Africa and anywhere in the world really where you operate. So getting that right from the beginning at early exploration is critical, and we've continued to foster that approach by focusing our employment on Ghanaians only, training our teams and employing locally where we can. Now, in addition to the social aspects of ESG, obviously from a technical point of view, the short trucking distance, the simple low power consumption, low water consumption process flow sheet design, the hydroelectric power input really means that this project has a small carbon footprint compared to our peers. So we really do believe we tick those ESG boxes around the project. So all of those key fundamentals, so the simple geology, simple mineralogy, so spodumene only dominant mineralization, proximity to operational infrastructure, DMS only process flow sheet, no need to go to flotation. All of this means that we delivered an exceptional pre-feasibility study with really strong economics. So you can see on the left there, based on our current resource of 30.1 million tons and a 2 million ton per annum ROM throughput, we basically generating an NPV8 post-tax of over 1.3 billion, internal rate of return of 224%. CapEx is sitting at 125 million, and that gets paid back within 20 weeks. And this is over a 12.5-year mine life. Very low life of mine OPEX, FOB Ghana, just over $270 a ton. And EBITDAs of just under $250 million per annum. So you can see that's an exceptionally strong project, and financially, you know, it's rare in my view. I've never been involved in projects where you're seeing these kinds of financial metrics. So I spoke earlier about you know what we're generating in the credits. So basically, that the project will be generating or focuses on a spodumene concentrate, SE6, and we produce 255,000 tons per annum. And in addition to that, we generate DSO fines from the plant. So those are the crusher fines, and there's currently a market for that material, as well as feldspar credits, which go into ceramics, and there's a market for that material. So they've been included in the study, and test work on our products demonstrates that they're highly desirable within the market. And currently within our project, only 50% of our offtake is committed to Piedmont, with 50% of the offtake or of our production uncommitted. So now that we've delivered our PFS, we can start focusing on what we do around our offtake and how we structure potential offtake agreements that can maximize shareholder returns. Another opportunity that we've spoken about is the potential for DSO pegmatite sales. This is in situ DSO pegmatite, so it's basically the raw pegmatite unprocessed. So you would have seen recently with Core Lithium, they have been recently sold into the market DSO in situ pegmatite. So it's not processed, it's drill, blast, truck, ship at $950 a ton. So this is something that we may consider, or we will look at going into the next stage of studies. And it will allow us potentially to look at options around that fine-grained P2 pegmatite. So rather than stockpiling it and processing at end of mine life due to that lower recovery, potentially look at DSO pegmatite sales at early mine life. So this is our growth story from our maiden resource and resource growth up to 30.1 million tons in a very strong pro-mining jurisdiction of Ghana. So they've got a 100-year mining history. A lot of their gold mines have now moved underground. There are 3 universities that teach across the mining sector in Ghana. So it's very well established, stable jurisdiction, pro-mining jurisdiction with all the skills required to build and operate this mine primarily within Ghana. The project has very strong ESG credentials, and the project economics are pretty fantastic, to say the least. And really from here, our main focus now is a resource upgrade, which we're targeting for the end of this year. That will then feed into our DFS targeted for mid-2023. You would have seen that we recently submitted our mining license a couple of weeks ago. So that all going well is a 12-month timeline, but obviously it's dependent on the processes in Ghana. The most recent mining license to be granted was for a gold project in the north of Ghana, which was an 18-month timeline, but that was a 4 million ton per annum throughput, life of mine grinding of the gold, and huge tailing storage facilities, which we don't really contemplate, or we have a very small tailing storage facility in our project, and their project required the relocation of 2 villages. So that was an 18-month timeline. So we're hopeful and confident that we can get our permits through within that 12-month timeline. And on grant of the ML, that will then allow us to be in production with production started or targeted for end 2024. So I think that's it from me, and I'll hand it back to Neil.
That's great. Thank you very much indeed, Len. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few moments to review your questions, I'd like to remind you that the recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet company dashboard. Neil, Len, Amanda, I'm just going to bring back up your cameras for the Q&A. As you can see, Neil, we've received a considerable amount of questions throughout your presentation today, along with a number of pre-submitted questions. So if I may just hand back to you to host the Q&A, and then maybe if I may pick up from you at the end, that'd be great. Thank you. Could I just to remind you just to read out the questions as well? Thank you.
Okay, I will. I'll work through the questions as quickly as we can, but try and address them all properly. So the first question are there plans to further strengthen the excellent board of the directors that we already blessed with? I think I can answer that one, and the answer is that we are very much in the process of transforming the company. As I said at the beginning, obviously we've had, and full credit to the team, a very successful exploration, discovery and development. We're now need to move through the development phase and the mining phase, and so you will see a continual transformation of both the executive team and the directors over the next 2 years. So the first of those was actually announced this morning, so that seems to be quite a convenient mode. We're appointing a COO, so we're bringing in a chap called Keith Muller. So Keith, a very impressive individual, we're very lucky to have him. He's been running the Mount Cattlin mine in Australia, deeply experienced in lithium. I'm very impressed with him, and I think he's going to have a big impact on the company. But yes, you can expect to see further additions to the board and the executive team as we move forward. Next question: how involved have Piedmont and ASOR been in planning the PFS DFS? Do you expect these relationships to evolve as you move into the construction phase? What I can say is that we have a technical committee in which both Piedmont and ASOR, if you like, on our side of that, because they form part of our team, work together. And so adding a lot of value to the project. We really appreciate what they've been doing. And indeed, we expect them to play a major role in how we move forward. However, we have the operatorship of the project, so it's down to us for, obviously, with our executive team to take the project forward. How confident are you of meeting the planned timeline to production? What are the key risks in this regard, and how do you plan to mitigate them, e.g. license, availability of long lead items, etc.? A very good question and a very relevant one. I'll make a comment, but I'm going to hand over to Len. I think the key advantage of this project is its simplicity, and I keep mentioning this. I've worked in the industry for 25 years, and I don't think I've ever seen such a simple project as this one. So we think from a licensing perspective, while obviously these are important hurdles for the company to work through and there are standards we have to achieve, I do feel that we're in a very good situation. What would you like to add to that, Len?
Yeah, look, I agree with your comments there, Neil. I'll just add to that. Obviously the permitting timeline is critical for us, and that's something that we were very cognizant of, and how we really pushed to deliver our PFS within the time frame that we stated we did, so that we were able to submit our mining license application. So yeah, I've gone through the ML process, and I'm confident, or I'm very hopeful that we can achieve that timeline. And we are discussing within the team and our JV partners and major shareholders strategies around long lead items.
Okay, thank you. So where were we? I am concerned about the time and geographical distance between the Australian management team and the in-country day-to-day operations. Will members of the management team be relocating to and on the ground to control the project deliverables and costs? Do you think you have an experienced team with a strong enough background in project delivery in West Africa? Very pertinent question. So as I already said, we are in the process of transforming the team. So I think there's a couple of sides to that. That's the senior level management, and obviously the addition of Keith Muller today are a very important addition. We're in the process of filling out the project team as we go now. So we've been interviewing people, and you'll see more news on that front as we go through coming weeks and months. In terms of the time difference, obviously there's a team on the ground, and we also have the corporate management side. I mean, I will say that while we haven't formally agreed this yet, we are looking to move the administration of the company in Australia to the West Coast. So it brings us nearer to the timeline of West Africa. So we do have an overlap because, and I appreciate everybody on this call, and particularly Amanda and Len there, and indeed myself, we have our management meetings at 10 and 11 p.m. at night, my time, which is hard on us all. So we really do want to see if we can bring one side that increase the team in country, but also to have a corporate management that's able to interact more on the timeline of those in West Africa. Len, have you any further comments on that?
Yeah, look, I'll just add to that. So with the PFS delivered and the team that was behind that, that's a team with very deep and ingrained West African experience. As I said, also myself, since I started work in my career in '96, I've predominantly worked in West Africa, Guinea, Liberia, Ivory Coast, Ghana, Gabon, to name a few. But importantly, our study team has lived and worked in West Africa, and our team going forward into this next phase of studies has lived and worked in West Africa and delivered project builds in West Africa. So I think we've definitely got the expertise and the experience there. Plus, through our drilling campaigns, as an example, we had our our largest and most successful drilling program through the peak of the COVID pandemic. And that was all managed with our team. Well, they're just it's a very small team here in Australia, but with direct consultation with our teams in Ghana, we were able to deliver our largest meterage and most efficient and tonnage adding drilling program through the peak of a global pandemic.
Thank you, Len. Yeah, I must say I'm very impressed by our team. I'm really looking forward to being back down with the team again next month and see how they're getting on. Okay, so next question is a money question. So I think this one's for Amanda. Lucky you, Amanda. Has Piedmont's contribution been received already? Does the company have the funds in place to complete the DFS? Are any additional expenditures anticipated for the DFS? Question mark.
Thank you. So I'll just, it's probably a misunderstanding, but Piedmont have basically been funding the project since we signed the agreement on the 1st of July last year. So you'll see if you have a look at our annual financial statements, you'll see that effectively the assets come in and we received a funding amount from Piedmont for the total amount that we've spent on Ewoyaa and basically any exploration spend in country. So yes, we've received the Piedmont contributions. We receive them every month. We send effectively a cash call, and a few days later, Piedmont give us the money for that kind of monthly expenditure. Does the company have funds in place to complete the DFS? Absolutely. We have $16 million in the bank. So we definitely, with a timeline up till June next year, we have funds to complete the DFS. If there's any additional expenditures that are required, and there's likely will be, but we have more than enough cash in hand.
Okay, thank you. So the next question is on a theme. How is the company planning to minimize shareholder dilution when raising the additional $27.5 million needed to build the mine? Remember, Atlantic only pays half. Will it be possible to fund this through debt or a strategic offtake agreement? So I'll chip in on that one. So there's in terms of additional funds that we may need, and we do have to remember this is pretty modest against future cash flows here. But there's a couple of ways that we'll address any additional money that we'll need, and it really isn't that much, as Amanda has set out. The first one is, yes, you're absolutely right. I mean, we could fund this through offtake agreement. We have half the offtake available to us, and people are clamoring for the offtake. Terms you'll have seen other projects getting out there are very favorable. But the other one is that we also have, and we mentioned this earlier in the year, this is the Sovereign Wealth Fund of Ghana has been talking to us. If they would like to invest, we think it would be very wise to have them on board, to have that local participation from Ghana. We think that's very helpful to us. So if they would like to invest, there may be some more money coming from them. But you're absolutely right. We could potentially fund the whole thing, such as there is, which is not that much money to take this thing to production through an offtake agreement. And we've been having those discussions, and actually we've been inundated with inquiry, which we are trying very hard to manage at the moment to get the best outcome. So you should see some news on that in the first half of next year. Okay. Can the company provide any further details on discussions with potential offtake partners? Well, we sort of just address that. The reality is that really there are a lot of people who have approached us for that offtake. And what we're really trying to do is make sure that we get the best terms possible. So we have some advisors that we're working with. I don't think I would like to mention the names of any of the potential offtake partners because they get upset about that. But there are many. Okay. How have our discussions with MITH progressing? Very well. So we will be down in country with them shortly and having discussions with them. We've always taken the view, obviously, being a sovereign wealth fund, they have their internal processes that they have to work through. And we've really left it to them on their timeline and just answered their questions when they come through. So yes, we'll be seeing them in a couple of weeks and we'll see where they are. Does the company have any plans for further drilling to expand the resource at Ewoyaa and more fully explore the rest of the license areas in Ghana? If this is successful, how soon might we see plans developed for a second phase development to increase production? I'm going to have a quick stab at that, and I'm going to let Len answer. I think the reality is that as Len set out, we did 47,000 meters, and we have results for, I think, less than a third of that so far, and those assay results will be coming out in batches for the rest of the year, at the end of which we'll be doing a new resource update. Beyond that, I would say is you're getting to the point where the resource is big enough to sustain a higher level of production. So that's something we'll obviously be looking at. And the obvious thing would be to do 50% more, I think. But I'm not going to try and say that today. But I think it's the obvious one for us to look at. And it's not an enormous increase in capex. It doesn't increase the capex 50%, we don't think. So those are things we will be looking at. Optimizing the project over the next 9 months is a key part of the process we're taking at the moment. So Len, any additional comments?
Yeah, look, I think that's correct. There's the exploration around the resource footprint that we were just talking about, and that drilling that we've just completed. So 47,000 meters, roughly a third of that is towards exploration growth. So we should see a resource upgrade in both in scale and confidence level. And that will be close potentially to the tipping point of looking at higher throughputs. So we're currently basing the project on 2 million tonne per annum throughput. But there is potential to push that higher to 2.5 or 3. So that's something we would look at going into the next phase of studies. However, more regional exploration is also critical as well. So that's carries on in parallel with the mine studies and mine build, going into mine build. And we have, as I mentioned earlier, a very systematic exploration approach where we've recently flown high-resolution heliborne radiometrics over the Cape Coast license, and we've completed 100 by 100 meter grid soils over that whole Cape Coast license, and all of that data is getting processed now. That will define additional targets, and then we follow those up with the man portable augers and mapping ahead of drilling with RC. So yeah, the exploration and building that exploration pipeline, both within the Awuya pegmatite field and the broader license area, is an ongoing process that happens in parallel with the mine build.
Thanks, Len. I think it's, we talk internally that we think there's an exploration target there of 60 million tonnes, which in time might come to fruition, but we're not waiting for that. We obviously want to get to production and take advantage of these high lithium prices. Another one for you, Len, here. So this is, there is quite rightly a strongly environmental governance culture in Ghana. Can you please confirm what steps you've taken to ensure that the project minimizes disruption to the local community and regional environment?
Yeah, so this is critical. And Ghana, with a very long mining history, has a very strong environmental governance culture. So obviously that's permeated through our design. From the very early days, we were cognizant of that and aware of that. So anywhere where we can within this project, which has a very small operational footprint in the first place, and it's a very simple process flow sheet with no chemicals. It's a simple crush. It's got a very small footprint tailings facility and inert waste materials, because you don't have sulfide like you would, for example, in a gold mine. So overall, lithium pegmatite projects, and in particular DMS pegmatite projects, so where you don't need to go to flotation, you're not producing huge volumes of tailings, mean that you have a very small footprint and it's very manageable, and that's all incorporated in the design around our project footprint. So for us, there's no need to relocate any towns or villages, and in terms of ground use around the project, small scale subsistence farming, and in particular charcoal production, so slash and burn. And it's also important to note that the project has focused on guiding principles. So in terms of our project design and process flow sheet design and the building of the project going forward, we're adhering to the Equator principles, the International Finance Corporation performance standards, the World Bank Environmental Health and Safety Guidelines, and the International Labour Organization conventions are some of the the international outlook standards that we're building this project to. So it's very important to us, and it's certainly included in the design philosophy for this project and also the way we operate in Ghana.
Thank you, Len. So next question, if the mining license was to be issued prior or near to the same time as the DFS, could mine build start straight away to maximize lithium price opportunity? And I'm going to say straight up that that's very much our intent, that as soon as that we have the license, that we are able to proceed and move forward with breaking ground on the project and taking it to production. So a lot of the work that's going on at the moment in terms of the project planning takes us to that point. If everything falls into place as planned, could we expect dividends 2025 and following? Obviously, we would love to be paying dividends. Clearly, there is very significant cash flows generated. Obviously, we have some ongoing costs and what have you, but I'm going to go with a yes. On a provisional basis, we would want to see dividends being paid to shareholders and be a cash flow operation as soon as possible. That's very much our purpose here. Early in 2022, we were told that we had received multiple third-party inquiries that would be assessed, reviewed by the company. Are these multiple inquiries still being reviewed, or indeed has the process now completed? Are inquiries continuing to be received as our resources grow and now that our PFS has been released? Now, what I've said about this in the past, and I'll repeat, we did a preliminary analysis. We got a lot of interest from parties. Unsurprisingly, a lot of them were Chinese. And we discussed that with some of our major shareholders. And obviously, we have some very big shareholders such as Assor and Piedmont about where we were with the company. There was a very strong view, particularly from Assor, who are a mining house, who understanding the mining industry very well, that there was a lot more value that could be achieved to try taking the project to production. And so we continue to take that to production. Yes, we continue to receive inquiries. Obviously, this is a very hot space indeed, and this is a very good project. So people continually come to us. But we believe we can get a lot more value out of the project by taking it through the hurdles to production. That's not to say that if there was not a knockout bid here, that we wouldn't recommend it to shareholders if the circumstances were right. But we think the real answer at the moment is to power through, take this to production, optimize the project. There's a lot more value that can be extracted from the project than is apparent in our pre-feasibility study as it stands today. Can you give an update on exploration activities and planned next steps in Côte d'Ivoire? Len, do you want to field that one?
Yeah, so sure. We're still waiting for our licenses in Côte d'Ivoire to be granted. So that's first and foremost. But then obviously, once they are granted, we would basically use a cookie cutter approach, similar geology, similar weathering, similar terrain as per Ghana. So apply that same exploration rationale, assess the potential of regional heliborne radiometrics. If that's confirmed, then fly that, complete grid soils, and then on the basis of that, define coincident geochemical and geophysical targets in conjunction with good old-fashioned boots on the ground mapping, which is critical with pegmatites in this weathering terrain. So just similar approach and waiting for those licenses to be granted.
Okay, thanks, Len. And here's the barge question, Len, something we looked at before. Maybe you'd like to field this one. Have you considered transportation by sea? Sorry, please go ahead. Yeah,
no, we have looked at this actually in the early scoping study and then did a refresh. So what is the potential like to, rather than truck concentrate down the Takoradi Highway, is it possible to transship or barge concentrate from closer to the deposit footprint, so that the deposit itself, as a crow flies, is 4 kilometers from the Atlantic seaboard, to then load it onto barges and then transship or barge it to the port of Takoradi. So we have done a study on this. Our last refresh, it was still, from a cost perspective, prohibitively expensive around capital cost in terms of building a pier and a breakwater in an area where you can physically load those barges, because the seaboard of Ghana is exposed, and you don't have natural harbour or still water terrains around headlands. And if those headlands are there, they're obviously used heavily for local fishing communities and fleets there. So obviously it's a trade-off between the capital costs and what the savings are from a transshipping operation versus trucking operation down the Takoradi Highway around potential congestion or impacts to communities along that road. So there are currently manganese and bauxite trucking operations down the roads in Ghana. The volumes that we're looking at trucking are significantly smaller, but it is part of the permitting process that we go through a TIA, a traffic impact assessment, and that's part of our EPA process. So yeah, we'll continue to look at this option, but currently the project's designed around a trucking option to the port of Takoradi.
Thank you, Len. Next one is more a comment rather than a question. It is, thank you for all your hard work. You've done an amazing job to deliver so much in what has been an incredibly difficult period for the industry and the company. I know I speak for many when I say that we are eternally grateful for everything Vincent did for the company and everything you have all done and continue to do to honour his legacy. I thank you for that comment. Obviously, Vincent was very close to all of us. We're all working for the company because of him. But you know, we are honouring his legacy by taking this project forward, and I have no doubt he'd be very proud of us all to see our mining license application go in recently and see that we're taking the project forward to something bigger and better. So thank you very much for your comment. Next comment, actually, I think this is probably a good one for you, Amanda, to talk about how the Piedmont contract works. So on delivery of the DFS, how long do Piedmont have to elect to construct?
Look, it's you know, obviously contracts you know, are very much like, you know, a process in terms of steps. In reality, it's not as linear as that, and we're kind of in constant discussions around how we proceed. We're obviously going to be starting to fund CapEx pretty soon in terms of getting long lead items and the process around procurement and different parts of the project. So effectively, this is a kind of mixed bag, and so we're, you know, at the moment we're continuing forward, and the election will be pretty much straight after that we've done, you know, lodged the DFS. Piedmont will get their 22.5%, and we'll already be proceeding through to construction.
Thank you very much. So here's one, people holding me to my words. I'll be careful what I say. Can you confirm that you'll be publishing a DFS for the Ewoyaa lithium project? I believe our chairman said that Atlantic will not need to do a PFS in recent interviewed as Atlantic is funded. I think my comment here was really on the basis that normally you do a full DFS as part of your funding. In this case, because we are funded, we don't actually require to do a DFS. But I'm going to hand over to Len to talk about what we are doing rather than my non-technical comments here. Go on, Len.
Yeah, well, so the focus is to deliver our resource upgrade, and in particular, you know, the increase in confidence around indicated and measured in that larger resource, and that will all feed in into a study update, which is targeted for mid next year at a higher level of cost estimation. So the PFS was based on plus or minus 20%, and this will come in below that. So yeah, we're working towards that and putting the team in place, as well as with the recent appointment of Keith Muller as COO, building a team around operational readiness, because of that timeline that we're looking at to get into production.
Okay. Thank you. I think another one for you, Amanda, on the Piedmont deal. At what stage do Atlantic and Piedmont form a joint venture?
So that's actually when the plant is built. We actually form an official joint venture when Piedmont get their remaining 50% of the asset. So I think it's kind of it's good to understand that Piedmont are buying into the asset through our intermediary Singapore entities, and they will effectively have 50-50 of our Ghanaian assets through that process. When we talk about the offtake, we have Piedmont have the available 50% of our offtake, but that is a offtake agreement with the entities itself. So if you can imagine the prices that are out at market at the moment for the offtake, even having 50% of the offtake already taken and our costs at $278 US a ton, we will still be making significant money from 50% sale of product even before we take the other 50% through.
Okay, thank you. We have a question from Nick. Will the DFS maintain a 2 million tonnes per annum DMS processing facility? Is there an opportunity to increase this number and therefore the annual production of lithium spodumene? Or are you focused on just extending the mine life? Ooh, well, we're in the business of optimizing, but I'm going to let Len answer. Go on, Len.
Yeah, so we're looking at, we want to achieve both, basically, to grow that resource as big as we can through growth around the margins of the resource, but also exploration growth outside the footprint of that resource. And if that sustains a larger throughput, and as I said earlier, we're at that tipping point now, then to look at those larger throughputs. So going from a 2 to 2.5 or 2 to 3. Obviously, you need to weigh that up against the capital cost considerations. So the increased capex around a larger primary crushing facility, the downstream part of it, i.e. the cyclones, which is the DMS or gravity processing part of it to separate the spodumene out. They're modular and you just tag them on, but you need to design your primary crusher around that throughput. Other things we may look at is the primary crushing solution that we currently have, which is a C130. They're kind of an off-the-shelf crushing unit. Is to then, if you do look at larger throughputs, and that crushing unit's designed for 2 million tonnes per annum, but it can be pushed higher to 2.5. The other thing you can look at is contract crushing on the side, rather than the additional capital cost of a larger 3 million tonne per annum throughput. So there are a lot of different options to look at here, and it really depends on where the resource scale falls post the resource upgrade.
Okay, thank you. Roger's asking, on the applications in Ivory Coast, how long do you expect until we get a response on the applications? I mean, I think it's fair to say that, yes, we think they're very interesting areas and we do want to work on them. We haven't been pushing that hard simply because at this point in time, to be frank, the Awoya area is obviously much larger than the existing resource. And so we have a great deal more that we can do in that area. Obviously, that is our primary focus. And we would like to continue to add more resource there than anywhere else at this point in time. But they're not forgotten, and we will certainly continue to pursue them. Another one on DFS and my foolish comments from David. Development timelines normally have a DFS-like instrument as a key successor to achieving FID. DFS is also useful to provide more detailed transparency and confidence for investors in the project complexity and timelines. Additionally, the October 22 presentation suggests that Piedmont second stage investment funding was dependent on the development of a DFS. Atlantic's Neil Herbert recently suggested DFS will not be produced. What will Atlantic management use to satisfy a DFS normally provides? Go on, Len.
So, yeah, as I mentioned earlier, we are doing a study refresh at a higher level of confidence. And we are looking at other options around feed in parallel with an updated study, the DFS. So that's to meet the timelines that we're working towards and support or confidence in terms of investment with our major shareholders in Piedmont.
Okay. question from Russell. Do you have any known lithium assets in Ghana outside of the 50% offtake agreement with Piedmont, where Atlantic own 100% of the resource? And the answer to that is no. All the assets in Ghana that we have are in a 50% joint venture with Piedmont eventually. So in answer to that, but obviously they also have to fund their share if we work in areas outside our existing area. On 4th of April 2022, Atlantic Lithium appointed Canaccord Genuity to evaluate unsolicited inquiries from multiple parties interested in acquiring all or part of the company or its assets. Canaccord submitted board and recommended offers from Russell. I think I addressed this earlier. As I said, we had a lot of interest, and that's not surprising because it's a very good project, but we do believe that there is more value from taking this further and actually squeezing more value out of the project by taking it to production. Another question from Russell. In May, you confirmed that Atlantic had been approached by Ghana Minerals Income Investment Funds, that's MIF, over a potential investment in the company. Has this moved forward at all? Yes, it is, and I think I commented on this earlier. They obviously are sovereign wealth fund, and they have their own internal processes and procedures, which take quite a long time. But we will be catching up with them again in Ghana in November, so I'm sure there'll be an update sometime after that. When are you planning to order long lead items for the mine in order not to jeopardize the production start? Thanks a lot. That's from Elijah. Then.
Yeah, so this is something we're discussing with our major shareholders in Piedmont. And in fact, the most critical time item in the study isn't the long lead items, primary crusher, it's the realignment of the high voltage power lines. So that's something that we've commenced with the Ghana Gridco and getting that ball rolling to commence that work. And secondary is the primary crusher, which we're looking at options around that with our partner Piedmont.
Okay, thank you. I am reminded that we're now well past the hour by the host here, so I'm just going to see if I can have a quick flick through of any particular comments, I think, which I think might be worth commenting on. There's one here from Colin. I wonder if you have compared your development costs and political risk with your competitors in South America, as well as Argentina, Chile, developing. And I saw an interesting program indicating Bolivia has a major potential resource available. Yes, so I'll have a quick stab at that one. Obviously, there are different types of lithium resources. You have hard rock, spodumene projects. You have the brines, which are typically what you see in Latin America, and so those projects are potentially much bigger. They can take rather longer to bring to production, and it's a different style of mineralization. If you talk to the converters, I will say most prefer to have hard rock spodumene, and particularly ours, which has very low impurities. So in terms of the political risks, obviously Latin America is a very different place to Africa. I'm not sure I'd want to be trying to comment on each of those countries' political risk factors. Obviously, there's been a move to popularism generally in Latin America, but each country is different. Ghana, on the other hand, however, has been a very stable mining jurisdiction for a long time. So we're very pleased to be working there and working with our Ghanaian partners. I don't know. We're now at sort of 8 minutes past the hour. Maybe I'll just see if I can flick through.
Neil, just while you're having a quick wander through those questions, for every one question you answer, there's another two that keep coming through. So there is every chance we could keep you here for the rest of today. But for everybody that has submitted questions, any questions will be reviewed that haven't been answered can be reviewed by the company, and we'll publish any responses alongside those that have been transcribed as well. So with that in mind, Neil, maybe it's a good time, if I may, because I know investor feedback is important to you all. I'll shortly redirect those on the call to give you their feedback, but I wondered if I may just ask Neil Neil or Len for a few just closing comments just to wrap up with.
Okay, I'll make some quick ones and then can add to them. I mean, I do think that, and I'll say to everybody here, this is the lithium space is a very interesting area to invest in. We have a complete changing technology towards electric vehicles. As I said, if any of you have not read it, it's a really good book, Bolt Rush by Henry Sutherson, which he explains what is going on and why it's such a revolution, and why it's so difficult to bring on so many mines so quickly. In other words, why we're in a good situation. The Awoya project really is a wonderful gift. It really is a great project. It's very straightforward, and simplicity, as I always say, is a real bonus. And finally, you know, I'm really pleased that everybody has joined us today, and I'll try not to drag this out any longer, but thank everybody for their many questions, and we're always available if you want to get hold of us. We'll be very happy to answer them individually. Len, any other comments you'd like to make?
No, I think you've covered it all there, Neil. Just to thank everybody for coming along. Awoya is an exceptional project. It's got all of the right ingredients, and we're putting a team in place to deliver Ghana's first lithium mine.
Thank you. And thank you, everybody, for attending. I really appreciate it.
That's great. And Neil, Amanda, Len, thank you very much indeed for your time this morning and for updating investors. Could I please ask investors on the call not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the company can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Atlantic Lithium, I'd like to thank you very much indeed for attending today's presentation. That now concludes today's session, and may I wish you all a very pleasant morning.